Hello, welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest is Don Pollard. Don is a CLU or Chartered Life Underwriter. He's also a CHFC or Chartered Financial Consultant. He is an insurance broker practicing in San Jose. And Don's worked in the insurance industry since 1973. He has managed insurance agencies, trained agents, built employee benefits departments, and is currently a broker serving individuals and small businesses in San Jose. Don is a past president of the Silicon Valley chapter of the National Association of Insurance and Financial Advisors. He currently represents the local chapter to the National Association in Washington, D.C. So, excuse me. Today, Don and I are going to be talking about health insurance for individuals, and we've been doing some coverage of healthcare reform for a number of years now, so we're going to have a continuing saga here. Today is October 20th, 2015, so I have to tell you that, again, this is an evolving situation. We may see more developments eventually come out of Congress. We've had quite a bit of litigation. So far, the Supreme Court has supported the healthcare reform. Okay, Don, what's the, first of all, thanks for joining me today.
You're welcome.
Okay.
Appreciate it. Thank you.
Okay. What's the current status of Covered California enrollment effort?
Well, Covered California, as you know, is the state-run exchange in California for the individual marketplace in California. And they're kind of like the biggest news. I think how they're doing and what they're trying to do, effort brought forward to reduce the uninsured, which is the major problem in our country that the Affordable Care Act, or ACA, was meant to address. And Covered California has reported through their executive director that they have currently over 1.3 million active people in the system, and it's including 2 million people who actually bought insurance through the exchange, and then roughly 780,000 people who dropped off the exchange. And they report also that of those people who dropped off, 85% of those people continue to be insured through another source, either an employer or another policy, an individual policy, that kind of thing.
Okay.
So it's they feel, and I think it's accurate to say that they've done a good job. Most of the people, the participants in the exchange, are eligible for a subsidy, and the reality of it is that this is the only place that a person can get a subsidy for coverage on their health insurance is if they go through the exchange. So 90% of the people that actually apply through the exchange are eligible for subsidy, and that subsidy currently covers roughly 70% of the premium for individual people, or on average about $436 a month. Now, as you remember, we've done this before, and we talked about the theory of the exchange for frictionally uninsured people, which means the people that are laid off, they don't have any income, and that kind of thing, that the exchange was designed to give them an option other than COBRA, which is very expensive employer continuation insurance. And I think that's what we're seeing with this huge number of drop-off people. I know that in my own clientele, I've had people that have come in, they're unemployed or laid off, looking for another job, and they've had exchange insurance for 3 or 4 or 5 months, and then they get a job and they go off. So that's pretty normal. Covered California also made a serious impact among the uninsured in California. The rate dropped from 17.2% to 12.4% in 2014. So that's a substantial increase, and that includes coverage from Covered California and also from the Medi-Cal expansion. Also, as you may recall, they Covered California made an extended effort to attract Latinos. to the Covered California Exchange because of their high population in our state. And through their efforts there, they've increased that about 25%. So now they represent about 37% of the participants in the exchange, up from 30%. So,
wow.
So those efforts for them have paid off well. And I think everybody agrees that there's still a long way to go relative to that group of people in our population.
So how did these people get into the program?
Well, so there's multiple pathways, if you will, to join. One of them is you go to the website, out of the blue, and you sign up, and roughly 30% of the people signed up that way. There's a pathway through a certified insurance agent like myself. 43% of the people who signed up got there that way. 14% through enrollment counselors, which are people that are employees of nonprofit groups around the state that have had a contract with them to help people enroll, and then 13% from call center representatives. So clearly, the lion's share of the people that are getting help into the exchange are being helped by an insurance agent. Now, it's interesting. I was thinking to myself when I was looking at this statistic. I have multiple people that I've helped ultimately that initially went tried to do it through the exchange or through their call center representative, and they just couldn't get it done.
Yeah, so
and
frustrating. Yeah.
They finally called me and they said, "Can you help me?" And I said, "Okay, well, I do know specific ways of calling people to talk to that I may be able to help you." So I'm not sure in those numbers how many are counted twice,
No.
and how many aren't, but.
Well, I hate to say it, but I can tell you Don has bent over backwards, and an awful lot of his telephone work and so forth is in the wee small hours of the morning, so thank you for that, Don.
Yeah, you're welcome.
Okay. So what's new now for 2016, and what do you think is the good news that's coming?
So there's good news and bad news as usual. The good news, I think, is really great because they've made a significant change in the benefit structure in the bronze plan. Now, if you recall, the bronze plan is
they weren't very attractive.
Yeah, the lowest end plan. It has typically a $5,000 deductible, mm-hmm. And the way the plan used to operate is that all expenses had to run through the deductible first, which meant that if you had a prescription or if you had to go to a doctor's office visit, that all had to be subject to the deductible. So basically, you ended up, the insurance company paid nothing and you paid the whole bill. They've changed that now for 2016 in that the first 3 office visits are covered with the deductible waived, and one of those visits can be to a specialist. So they've really expanded that, and they've also taken the deductible requirement off of laboratory work, which is another, clearly you go to the doctor if there's something haywire, you do have a lab situation usually that they want you to do. So that's a terrific benefit increase. Mm-hmm. And because Covered California requires uniformity, this is going to apply to commercial plans as well. So this is going to take a little bit of the sting out of that $5,000 deductible. Many people, individuals as well as employers, choose that plan because it is the lowest cost plan on a monthly basis. So that's going to help a lot of people. The other significant change in that, in all plans, is there's going to be a cap implemented on specialty prescription drugs. So this is the latest scenario of drug price increases that are through the roof. And the cap's going to be it's going to be specifically tied to the metal level of the plan, i.e. bronze, silver, platinum, and gold. And it ranges from $150 for the platinum plan to $500 a month for the bronze plan. So what that means is an employee can pay no more than that amount per month for their prescription drugs. Now, just to give you an example, there's this drug called Sovaldi.
Uh-huh.
a terrific drug for people with hepatitis C. Basically, it cures 94% of the patients with the disease. There was no cure for it before. All they could do was treat it, and the treatments were basically unsatisfactory. Your hair fell out, you know, everything bad happened to you. So anyway, this Sovaldi cures 94% of the patients, but it costs $1,000 per pill, per dose. And the normal treatment is costs about $84,000.
Wow.
Now, this is a drug that cures people. So it's great, it's terrific. But the price of it is backbreaking to insurance plans and to people. So individual people, if they don't have insurance, there's no way they're going to be able to afford that.
Of course not.
That I can see.
Right.
So they're putting these caps in, but what this is going to do is this passes that price increase onto the insurance company. They have no way of recapping it other than increasing the premium. So basically, this will probably come back around. I think part of the problem here is that as another example of this kind of thing, Americans pay roughly $214 for a prescription of Nexium, which is the little purple pill that you may have heard about. The Dutch get the same pill, same prescription for $23.
Wow.
In England, it's $42, and in Spain, it's $58. So we, as a country, don't ask or require that these drug companies give us a discount. In fact, Medicare, the biggest buyer of all prescription drugs, is precluded from negotiating prices on drugs. So this is something that if our Congress could do something about something, maybe this would be a place to start, where we could at least begin a negotiation relative to that, getting a discount. So some other good news, they've added 2 new carriers this year. This Oscar Health, this is an outfit out of New York that is technology oriented, and their deal is they're going to provide new technology tools for people to manage their health and they get their benefits. So we're going to see how that's going to work. And then of course we have United Healthcare, who elected not to participate initially. Now the interesting thing about the system here with these 2 players is that California has a closed system. Carriers have to apply to them to be a part of our system. And what they told them was, look, either you come in now at the beginning, or you have to sit out for 3 years. Well, now United Health sees the market. Oh boy, this looks pretty good. So now they want in, and they've made a concession to them. Okay, probably because they're the biggest carrier in the country, and they've let them into 5 counties along with this Oscar Health outfit. So anyway, there's some more choices for people to have when they're through the exchange. And again, anybody who has a situation where they become frictionally unemployed or don't have any income, you know, this is something that you ought to look into for sure, because it really works well. I've seen it work for my own clientele that come in, come off, and also people that come in and they end up staying on because they haven't got a job yet or they don't have money. It's not based on assets, so it doesn't matter what you have in the bank. It only matters on income.
Right. Now, related to this, one of the things, or side effect of this, is that we've had a lot more people who've gotten into the Medi-Cal program, which is not really on the exchange, but it's sort of redirected from the exchange, I guess.
That's right, yeah. So the exchange now is the actual enrollment process for Medi-Cal.
Oh, it is?
As well as Covered California.
Okay.
Yeah. So what they have you do is they have you go to the exchange, and then you give them your income information, then the exchange decides where they send you.
Okay.
Do you go over here, or do you go over here? And there's quite a good piece, I know you have it, and it would be available to your listeners here, that shows the subsidies quite clearly relative to income level and number of family members And so, you know, if there's any possibility that you could get under that that umbrella, that'd be a great idea.
I mean, one thing that's kind of surprising, again, that we're not going to get into details about this right now, but that even some families that have actually quite a bit of income, if they have like a big family,
exactly,
they may be eligible for a subsidy.
Yeah, and there's also multiple subsidies. So at the very low end is the Medi-Cal, the low end of the scale. Then you get into the premium and benefits subsidy. Then you get into the premium subsidy, and then, you know, I think it's like almost $100,000 of income for a family of 4. You could still qualify for some form of subsidy under the program. So, and
the only way you can get it is by getting on through the exchange.
Yeah, the only way you can do it is through the exchange. And I've had a lot of people say, you know, I don't want that Obamacare, it's no good. So, you know, okay, you know, if you don't like it, that's fine. But the reality of it is that it's designed for people that get laid off. It's designed for people who need health insurance that don't have it. Whatever your scenario is, you know, you should take a look at it to be prudent about any kind of decision you make relative to medical insurance, and especially in light of the bad news.
Okay, let's get into
which is coming up next about the penalties. Now, initially, the penalties for not having insurance, and this was the big court case I think you alluded to earlier, in a big Supreme Court case about the legitimacy of the mandate for the individual mandate for insurance, obviously upheld by the Supreme Court. Therefore, this is the case. So you do have to buy insurance. You have to have insurance, and the penalties, which were not effective before, are now getting to the point where they've got to be. So they've increased this year for 2016. They will be the greater of 2.5% of your income, or $695 per person, right, for not having health insurance, and that $695 is half for children under 18. So you can see, I think the maximum is $2,000 a year under the penalty, but you can see you're at the place now where you might as well get the insurance as not have it, you know, because you don't want to, or whatever the reasons are, and so you should do it now. You know, the reality of the statistics tell us that not many people actually end up paying this. There are some exemptions that are available, but the IRS reports that there were 33 million uninsured people in 2014, and just 7.5 million were subject to the penalty out of almost 140 million returns. So not very many, and 12 million filers qualified for exemptions. So if you're in that situation and you haven't had insurance and you get the bill, it'd probably be good to get a hold of a person like yourself or myself and say, hey, you know, what is this right? What am I doing here? Or can I find an exemption for that? So yeah, I'd say, you know, that if that's the bad news, that's probably all there is.
Okay. Well, I guess the other thing that people are wondering about is, what are the premium increases like for 2016?
Well, the whole idea of the exchange, you know, obviously originally was that it's going to stabilize the marketplace for individual insurance, allow people competitive opportunities to gain quotes for insurance. And we've seen that happening. The aggregate increase was 4.2% last year. It's down to 4% this year. Now, the bad news for us Northern Californians there is that we aggregate at 7% for Northern California and 1.96% for Southern California, which then aggregates at 4%. But still, a 7% increase compared to the increases that I've seen and had the misfortune to have to deliver to people is nothing. So
doesn't feel like nothing, but anyway.
Of course, yeah. I mean, I feel like an idiot saying that. You know, well, 7% is nothing. Of course, it's something, but you know, when you compare that to 20 and 30%,
right,
of the recent years, decades actually.
So what are some of the problems that you've been seeing with the Covered California program?
Well, I think the ongoing problem is this narrow network issue, and that is it's becoming more clear now, but it's also becoming way more prevalent. So the skinny network idea is that, well, we have a network that people know us by, Anthem, Blue Shield, Aetna, anybody, whoever, it doesn't matter who. And they've known us by this network that we've had. Well, now, in order to reduce our costs, we're going to have to lop off the top 30%, the highest priced 30% of those physicians, because we can't afford to pay them, or we're not willing to pay them, or whatever the reasons are. So we've got now, these are going to be covered in our network, and if you don't go to them, then you're out of network, which, as we all know, the coverage is substantially worse out of network than it is when you're under a contractual agreement with the provider as to what they can charge.
So this has to do with the fact that people, and maybe they've been covered in the past, again with Blue Cross, Blue Shield, whatever, with a certain physician, and then suddenly, if they go to Covered California, they find out that they're not in the network for the Covered California coverage.
That's right, and I mean, you mentioned Anthem. Look, Anthem's not alone here. I mean, this applies to Health Net. It applies to Anthem. It applies to Blue Shield. It applies to all of them. Aetna. It doesn't matter who.
Okay.
So yeah, and frankly, Anthem has been attacked in the courts with class action lawsuits relative to not being forthwith in communicating a change in their network, because they changed all their networks when they entered Covered California, and again eliminated the top 30% of, when I say top 30%, I mean the highest cost 30% of their providers, in order to reduce the price or to increase the profit, however you look at that. I don't know. So this, in my estimation, is probably the biggest ongoing issue that they have. I mean, look, I think we're used to long waits on the phone. If even though they have been much better now, it used to be 4 hours a year ago. Now it's down to, sometimes you can get on there and there's only 15 or 20 people ahead of you in line in the queue, to have your questions answered. So that's that's okay. I mean, I still think there's issues with getting things accomplished and finding people who can actually get them accomplished. I mean, that's kind of my biggest complaint along the road. Is my whole career has been about solving problems that come up for people, and I've been frustrated with Covered California and the representatives they have. Not that they're not nice people, they certainly are, and they tell you anything you want to hear. But then again, when the problem doesn't get resolved, you kind of wonder what's going on. But interestingly enough, sooner or later it does get fixed, which I always believed would happen. But when you want to be in control, it's kind of hard.
Okay. What is the enrollment period this year?
Well, people can actually renew. If you're already in, you can renew now. They've changed all their...
It's October 20th. Okay.
Yeah, that started October 12th. They've changed all their computer system around. So now, basically, if you're trying to get into this program, it's much harder. You have to call me, and I have to call them, and do it manually, right?
Oh my gosh.
But if you want to renew, you can do that now. But the actual period, the open enrollment period, is from November 1st of 2015 through January 31st of 2016. So sign up early if you want to be effective January 1st, because if you wait till after December 15th, you won't be eligible to start until February 1st.
Okay. Well, I think we're about out of time. So do you have maybe a final thought you'd like to throw out?
I think that The key to it all is the idea of an array of information provided to allow people to make choices is a great idea. And what's happened is, because of technology, we now have the ability to inundate ourselves or anybody with so much information that it's impossible to decide.
Yeah.
So the key to it is to try to develop some kind of a criteria or a philosophy or something, or get somebody who has one that can help you to determine which of these things really make a difference. And once you do that, then you can use the technology to find the right choice for you and to make a good decision.
Don, thanks for joining me today.
You're welcome, Mike. Thank you.
Folks, we're out of time. Hope we've given you some information that can be helpful, if nothing else, maybe to some friends that you may have or family members. See you next time on Financial Insider Weekly.